Before starting the video, I want to tell you that this is an educational video. I am not promoting any stock, anything. I am not suggesting you to buy, sell anything. And this is just my personal view. And this is just for educational purpose. So don't get influenced by anything. So let's move into video. Okay, so hello guys. I just want to share my DCF model with you, and the company I choose is Mahindra and Mahindra. So this is my first DCF model. So if there any mistake or like you think the assumptions are wrong, the forecasting method is wrong, or this should be that, so you can comment and let me know. So so for the assumptions part, I've gone on screener, and you see here I have typed Mahindra and Mahindra, and you can see the export to Excel. You can export to Excel and you will get a file like this. You have profit and loss, quarter, balance sheet, and etc. And they have their best and worst case scenario for the sales, expensive, and everything. So I don't know why it's that formula is correct, but अगर आपके में आप ये खोलोगे तो आपके में तो सही खुलेगा, because this is just last year uh, into growth by this number, so you can check the formula. So I don't know when I opened it was right. I don't know what happened. So for the best case scenario, they are expecting a growth of 23.25% and the worst 5%. So in my DCF model, the assumptions I took is the growth is 25% and expenses are constant 82%. Their expenses part, so we will see that later. So yeah, so actually I want to build a functional DCF model where I can put three cases like base, uh, conservative, and optimistic, but I just mess up the switch and I can only use the base case scenario for this DCF model. So I think we're gonna stick to that. So you can check this DCF model. I have provided the link in the description, and there's not. So the one thing I wanted to share with you, that the capex part. So a company like Mahindra spends around six. In 2019, it was spending around 6%, and 2020 6%. But they recently like started increasing their kind of increase their capex. They slow down, and it's kind of hard to project that will they invest more in their capital expenditure, because you know they have their new electric cars coming up, and it requires infrastructure and all of that. So I've kept very constant capex of 3%. I think it's a bit lower, and I think it's gonna like benefit in the valuation. So like what I have done in the valuation is कि मैंने क्या करा है कि मैंने ऐसा केस बनाया कि आई एम टेस्टिंग कि उनकी सेल्स अगर एक ऑप्टिमम रहेगी, मतलब कि आई एम benchmarking at a higher number. So if they perform well, so that means they, in the real case scenario, if the forecast are close by, so they're gonna be fine. So it gonna give you a rough idea कि अभी क्या चल रहा है मार्केट में. And actually I want to build three cases: conservative, base, and optimistic, but I only able to operate in one. I think I messed something up the formula. I will check that later. So you can see in the revenue projection, Okay, so if we go to the, so they have this number which is their 2024 sales figures, and right now it's Friday 1st November 2024. So they are projecting this number and they are projecting the best and what this is. So what I have kept done is I have kept at a constant growth rate, because in the recent years um it's very fluctuating. In COVID it's dropped, in next year it's went up because they launched their new Mahindra Thar, so the sales gone up, and since then it's been quite volatile, 21, 34. So what I have did, so I have took this number 18% as a base, because the in the optimistic scenario, the projections were that it will grow at a 23.25% rate, and in the worst it will grow at a 6%. So anyway it's more and less than 6 or 24%. So I have taken 18% as a base. I think it's a bit too high, but in 2023 they grow 34%. So the company, the people want, investor want, have a high expectations in company. So 18%, and I grew it by 6% every year. So you can see the formula up there. Here, this number multiply by 1 plus 6% every year, and I've kept the expenses constant. You can see expensive percentage of sale. So it was always around 80, maximum 87 and 83. The company did well in controlling their expenses, and so I've kept it constant at 82%. And EBIT, EBIT is also constant. And so in the base, even in the base scenario, I want the company to grow its EBIT. So in this year, this is uh, this number divided by revenue, and I grow it by 0.5% every year. So in 2029 it's 20%. And same goes for the data and amortization. I've kept it pretty much constant. Okay, the one thing I, so ignored this number. So we were talking about the capital expenditure part. So I think Mahindra will invest more because of their EVs infrastructure, their new cars, and they are expanding. So I think they will. This number will go much higher in the future. I've kept it 3% for the, even in the base case it's like optimistic. So it will only be, it will, in this scenario it will help the company for a better valuation, a little bit higher. And yeah, everything else is standard. So so here is the free cash flows. Interesting, right? 19, this figure is 19 cr for a company like Mahindra, um, which is like 3.4 lakh crore company. This number for 2024 is, I think there must be some error. So these numbers come from, you can see here. So we are adding the EBIT, uh, adding the depreciation and amortization, because it's not actually an expense. So we will add it back, and we will subtract capital expenditure because company will spend, so it will be a cash outflow. And change in net working capital, company require more capital in the future. So this figure comes same for these. So you can see for the forecast it's 1200, 1200, 3400, 5, and then comes the terminal value. You can see the formula here. Actually, I made this Excel in my laptop, but my laptop is not does not support video recording, so I have to record in my iPad. So then we discount the present value of this terminal value by WAC. So how we calculated the WAC, I have stated the formula. You can go through it. And for the assumptions, so risk-free rate, if you go and search, so risk-free rate is, I took 5-year government bond. So you can see it's around like 7%. The website I refer to is Damodaram Online. Uh, so he's a NYU Stern professor. You can go through his website and you can get all the assumptions data. So I've took that all. So beta for Mahindra is 1.48, market risk premium is 6.8, and debt is this. You go through screener, you search debt. Here it is. So debt, and so we apply the formula for WAC. I stated it here. We go into DCF model and discount it back times the year we are in. So you can see. So the future cash flow, that the terminal value, that all terminal value is all the cash flows that our company is generating. So we discounted back by the last year, 5 years. So 1 plus WAC to the power 5. Then and oh no. So enterprise value is sum of all the cash flows and the present value of terminal value. So one thing I like to explain is, wait a minute. One thing I like to explain is that this terminal value is the terminal value of company after 5 years, and we discount it back by the rate of interest to the present value. So that's what DCF modeling is. And we subtract the debt and add the cash. So the equity value comes to be this number. You can see this is the market cap of Mahindra, and what we have calculated is this, and we divide it by the number of shares, diluted share count. So equity, number of equity shares. Okay, so number of equity shares 124. All the figures are in CR. So these figures are also in CR, so it's not a problem. So we divide this number, which is our enterprise value, divided by the total number of shares, equity shares. So our value comes out to be 2008 rupees per share. And the current value of share price of Mahindra is 2700 27. So you can see it's trading at a higher price than its enterprise implied share value. So the company is overvalued, the stock is overvalued in my DCF model. If you even change some assumptions in, let's say, more in a favor, then it will not affect much. So that's it for today. I will provide the link for this Excel file in the description, and you can go through this and you can tell me if there are any mistake. So yeah, so thanks for watching.